What's up, guys? Give me a quick sound check, then we'll get into it. Might be a little bit of a lag. Good morning, fart coiners. I think Flood or Thinking USD had a funny post along the lines of farts were funnier when the 10-year or the 30-year was below 5%. Mic sounds far away. Does anyone else have that issue? The mic sounding far away? I mean, I mostly just care about it being clear. All good? Cool. Yeah, so I hopped on before, but for some reason on the Telegram, seemed like only half of the people had audio and had video, so I'm not quite sure why that was. But I also have never streamed through Telegram. I was using Streamlabs and a stream key, but for some reason there were some technical difficulties. So what I'll do is, I think moving forward, I'll just do this. I'll share the YouTube link in the Telegram, and you guys can join through that. Give it another minute, and then we'll get started. How's everybody feeling about the market? I should say, how do we feel about the next month and let's say the next 6 months? So get some opinions on how the next month unfolds. So that's through the inauguration. I think some people think that have pretty strong opinions on whether or not the inauguration is buy the news or sell the news, right? And then 6-month outlook, so into summer. Been wild. Yeah, it's never been more over. Big gamblers. This is not actually a website. There is a website. So actually, that's funny you say that. I only realized that recently. This is Bookmap. So back in 2000, 2001, I was using Bookmap. It's a really great order flow platform. As you can see, it's a couple things. It's got the heat map, so the depth of market. It's got your CVD. It has an active order book. It has a session volume profile, just the things you're looking at. There's other customizations. And then it has large orders displayed by those circles that you see on the chart. And this is great for just keeping a close eye on flows if you're looking at how size is coming into the market, how the market's adjusting. This is probably not for, someone who is investing and position trading. This is more of your lower time frame stuff. But these windows in particular, on the left side, you have an aggregated book covering Binance futures and Bybit and OKX perps. And then on the right side, you have the aggregated spot market. Really great tool. It's, I don't want to say it's expensive, but there's a lot of free crypto flow software. This is not one of them. This is something that a lot of people who trade traditional markets use. It's got a full trading suite. It's got a DOM, all of that. But if you use their website, so this is the desktop software. It's a little bit heavy on the computer. But if you use their website, they have a really nice crypto setup. A bunch of exchanges integrated, a bunch of pairs loaded. But yeah, this is something that I was using back in 2000, 2001, and then have recently gone back to this. It's just different than ExoChart. ExoChart's great if you want to all-in-one with your TPO, your footprint, some more flow-based indicators. This is something you could actually trade through. This is something that has, in my opinion, a little bit more. But yeah, to each their own. I think you could kind of accomplish both, but Trading Light's great too. There's a lot of great crypto order flow platforms out there. The thing is, like, what I've noticed is, like, a lot of the web-based ones, a lot of the crypto native ones, I don't know, sometimes I don't believe that they're getting accurate information or that they're updating quickly. And I've never had a problem with using the stuff that I used before this market, trading TradFi, so specifically Sierra Chart. Bookmap as well is kind of on the same level of Sierra Chart, different platform, but really reliable. I would say professional grade. Most of the people using Bookmap are retail traders, but it's a great piece of software. Anyway, let's get into it. Before we get into it, none of this is financial advice, strictly for entertainment purposes only. I'm just going to give my views on the market. There's a lot to talk about. I'm going to try to keep it short and sweet, hopefully under an hour, even though I've gone on now for 10 minutes. There's a couple things that are, I guess, always worth pointing out in the beginning of the streams, and this will be shared on YouTube. So I haven't been on YouTube in a while. I haven't been on Telegram much over the last week. I was potty training my daughter, so that's done, and I'll be more active again in the Telegram. So apologies for you guys who've been in there, been waiting, but I have, haven't really been around. I've been posting on Twitter on and off. But yeah, bringing back the streams, obviously, now that I'm free. The voice streams are good in Telegram, but there's obviously something to be said for pulling up the data on the chart so that you guys can see what I'm talking about, because otherwise, some people have difficulty following along. There's a couple links below. So there's the Linktree link with, my flow course attached right to that. It's the free flow course on YouTube. So if you're tuning in from YouTube, you don't have to worry about that because you could already see that. There's a playlist. If you're on Telegram, go ahead and go to that Linktree or go through this link on YouTube and take advantage of that. So it's a free flow course on market profile and order flow. A lot of the things I talk about are in there. More of a surface level sort of fundamentals course, but very useful. There's a couple links to exchanges. Again, always trying to get you guys as many bonuses as possible. Ended up doing that charity drop for the month of December. I was sharing a Blowfin link for a month to see what it would generate, and donated those proceeds to St. Jude. It wasn't really much, honestly. No one traded on that. I think it was like a $2,000 charity deposit to St. Jude through the giving block. So I'll go ahead and share that on Twitter. I didn't share that on Twitter. But anyway, Femex is also doing an exchange competition right now. It's useful because the market's moving. A lot of exchanges do competitions and the market isn't moving, so it makes it just like it's an event for them to generate fees. But if you're trading on Femex already, and again, vol is up, why not trade through the competition? It's not like it costs you anything, and see if you could take a shot at that price, whatever it is. Anyway, all right, let's get into it. Yeah, just looking at Bookmap right now. I got a bunch of thoughts. There's a lot of conversation right now about, I think one of the more pressing conversations is whether or not, the cycle is over. I find cycle talk to be really silly. Like, as we go through time, and Bitcoin's been around obviously longer and longer, and it's definitely a success. It's definitely won. I think it's just so likely that we break from past patterns. Things drastically change as an asset matures, as it, is exposed to more types of, different types and more types of buyers and sellers, more types of investors, all different types of participants. As the spot and derivative markets mature, just everything changes. So crypto has, for the most part, nicely followed this kind of 4-year cycle. Again, a lot of it revolves around the halvening cycle. But I think that the idea that that's going to just continue into the future as a very predictable pattern, it doesn't make a lot of sense, because there are a lot of people that they talk about this as if it's, the most actionable insight that you can have access to, and that's all you need to know. And trading is so easy in this market. And they completely overlook all of the things that have changed over the last quote unquote cycle, the ways that we've deviated from previous cycles. And honestly, it's just a bunch of confirmation bias, I think, moving forward. There's a great acronym. It's CREAM. Now, the one that you guys probably are most familiar with is cash rules everything around me. But there's another one that is even better, and that is confirmation bias rules everything around me. So the idea that, we're just going to have these very predictable 4-year cycles moving forward, I think is just very naive, because we've seen that more and more Bitcoin has become tethered to traditional markets, impacted by things that impact traditional markets, interest rates, central bank decisions, Significant shifts, significant macro shifts, geopolitical events and shifts. Obviously, presidential candidates, one over the other, clearly had much more success. I think if Harris was president, the market definitely wouldn't have responded the way it did. So it's on the big stage now. The idea that these patterns that occurred in the past are going to cleanly extrapolate into the future just seems really stupid, honestly. It's the best way I could put it. So the conversation around, is this cycle over, seems equally stupid. It's like, no, like, what do you mean? Is it like, are we at the top until the next 2 to 3 years? That's just, we're more than likely to have cycles now with traditional markets, right? If you've looked at stocks and you've looked at the Russell, the S&P, the NASDAQ as sort of a proxy, BTC has moved with these more often than not in the last 2 years. It's very unlikely that if we were to see a large pullback in equity indices that crypto would hold up. And I think it's honestly equally as unlikely that if we see, traditional markets, absolutely risk on liquidity coming into the system, that crypto stagnates. Like, if liquidity is going up, if there's money coming into the system, crypto benefits, stocks benefit. If there's money coming out of the system, if things are tightening, then both of them are going to get hurt, right? And the cycles that the S&P goes through are going to affect crypto as well. So, as much as this sentence has been said, I think ad nauseum, this time is different, haha. I think you could actually safely say that this is one of those examples where, things will be slightly different moving forward. So we're going to have these periods of the market trending higher, the trending lower, but I think it's just going to follow traditional markets. And I think you'll get really, I don't know, I think if you get hung up on this idea of it fitting into a 4-year cycle, that you're gonna miss some of the more obvious opportunities, and you might be blind to some of the more obvious periods in which maybe you should start to think about realizing some of those profits, right? Rather than just like blindly following, your favorite influencer on Twitter. So the idea of cycle talk to me, I think, is just a waste of time, right? Have we topped? What do you mean? Like, have we topped for the next 4 years? Have we topped for the next few months? I mean, I think one obviously has a little bit more weight. Or is a conversation even worth having, right? Anytime that I'm talking about, hey, I think we're, I think we're close to the end. I think we're in the later innings. When I'm talking like that, I'm not thinking years. I'm thinking in terms of how crypto Twitter thinks, which is, it's basically, it comes down to, are we in easy mode or not in easy mode for, a period of months, right? The idea that you're going to make long-term predictions it's such a waste of time. It's like the same, I participated in it because I gave my thoughts at, last day of December for 2025, but predicting a couple months out is just extremely difficult. Like, it's so difficult that it's a waste of time, right? It's for entertainment purposes only, truly, because you could have the best looking situation or setup, economically, geopolitically, from a liquidity standpoint, and then you just get hit with some exogenous event that is, catches you're blindsided. And, it's a black swan similar to COVID, or just any major market moving event, right? Any major catalyst that can completely change things. And I think if anything, like, crypto Twitter is it has the people who are native to crypto, they kind of keep their blinders on to things that take place outside of crypto because they want to believe that, like, this market exists on some island and it's unaffected, and it's like, you're not paying attention, man. Anyway, so my thoughts are still relatively the same. Like, nothing's really changed. It's a question of I think that we're more likely to have a better second half than first half, right? I think that there have been some shifts that are noteworthy. These are not just crypto related, crypto market related. This is something that's affected TradFi. There are things that I think have put a little bit of a lid on this market. And I think people inside of this market are putting a little bit of a lid on it as well, on themselves. So I guess it runs to go through a couple things, or more than a couple. Let's get off this screen, switch it up. So taking a look at just big picture, taking a look at the stock market first. Zoom out a little bit. Does the stock market look like it wants to go further down? So when I say stock market, I'm using the ES as a stand-in for the stock market as a whole, S&P futures. Does it look like it wants to go further down or further up? Simple question. Does the dollar look like it wants to go further up or down? Do rates look like they are going up or down? Things that are all, I think, have a significant impact on crypto, right? We've gone from multiple cuts this year to a conversation of, are we going to have any cuts, right? Are cuts done? Are we going to go back to a hiking cycle? Are we looking at, inflation? How are Trump's tariffs going to affect the market? How's that going to affect inflation? All of these things have spooked a good amount of positioning out in TradFi, and that is definitely spilling over to crypto. And I think if you're just kind of closing your eyes in the face of that, that's a mistake, right? So the bad news is obviously things have changed with regard to rates, or the interpretation of how rates are likely to change over the year, or whether or not specifically we're going to get any hikes. Whether it's like Bank of America or Goldman Sachs, there's different outlooks. I think Bank of America believes that we're not going to get any more cuts. I think Goldman thinks we're going to get two cuts this year. It looks like there's been a significant repricing, right? And the market does not like uncertainty. With regard to BTC, there's a couple more things, obviously. Just from a technical standpoint, this to me does not look like a market that wants to continue to rip up. This moving average you're looking at, you guys have followed me long enough to know that I am a trader who has maybe like a maximum of a 1 month time frame for my ideas. Before I'll sort of come back to them, or monitor them and see if maybe I want to keep positions on, or if the trades are done. But very infrequently are my trades held over a month. I am pretty dialed in, right? But bigger picture, right, in terms of my longer term positioning in BTC, looking at this market as a whole, because you have to look at Bitcoin as an indicator for everything else. Using longer term moving averages has always been really valuable. So using a 20 period, using a 50 period. I like a simple moving average. You could use EMAs. Obviously, we want something a little bit more reflexive, or I should say responsive, not reflexive. This is right now flattening out. We put in a lower high. We're spending a lot of time around that lower 90s region. The monthly does not look like it's, going to continue to race up. If I look at this in context of, what have been the things that have driven this market higher over the last year or so, it's been the ETF, and then it has been the Trump trade. So it's kind of like the Trump trade is all coming to the finish line, right? In terms of the market has already sort of priced in perfection. And, we've heard everything Trump has to say about this market. Everyone has the same idea of how this market is going to be affected moving forward, or rather not affected by certain regulatory entities, by, the long arm of the law. It's going to be easy sailing, yada, yada, yada. So I think prices do reflect that. And I think that's really important, because it doesn't mean that, now we're just going to completely about face and reverse, absent some major catalyst. But there is no really significant driver or catalyst, in my opinion, right now to take us much higher. And I think that's important, because we shift from easy mode to, back to it's great trading opportunities, but it's a trader's market at this point. I think a lot of people in this market, they actually don't want a trader's market. They want to, I want to be able to buy, shit post on Twitter, come back to my portfolio every other day and see that it's up X amount. Whereas you're going to still see people talking about how long you got to be, but there's going to be a lot of great short opportunities. The way this market's flattening out, you could tell it's exhausted. People are obviously exhausted. The thing that I've thought about is, so, absent short-term stuff, which we could get into that after. The 100K level was a massive target, right? Massive target. I mean, super ambitious. Considering where we've come from, in Bitcoin's entire history, to going back to the FTX lows, the COVID move down. I mean, 100K, that was something that a lot of people set as a target, but it didn't quite feel. A lot of people believed it, but until it's real, it's not real, right? It's a wish, and it was always a matter of, okay, 100K, but when? There's a big difference between hitting 100K over a 10-year time horizon from a growth standpoint versus hitting 100K over a yearly time horizon, right? So that's a massive level to hit. You have to now consider, right, because that level, from just a behavioral standpoint, was like the ultimate target for many, that it's going to be hard to sort of turn that target immediately into a buying opportunity, right? You're talking about a target, which implies, I bought Bitcoin at this amount. I can't wait to sell at 100K BTC. Bitcoin's going to hit six figures, and people plan on selling, right? There are people that hold forever, but a lot of people like to sell and take money and take it out of the market and buy things that are real with it. So the idea that this 100K level would be easy is really flawed because of that. You have to reframe this level now from an insanely ambitious target to now a buying opportunity, right? I mean, why do you buy things? Because they're below fair value, right? You trade the edges for this reason. When the market is ranging, when the market is bracketed, you look to find where fair value is. There's a bunch of different ways that people will do that. Everyone has a different system. But I mean, at the end of the day, what you're trying to do is you're trying to buy below fair value and sell above fair value, on the expectation often that the markets will mean revert, right, back to fair value. So you're looking for discounts and you're looking for markets that are way overpriced. And that's that, right? And discounts shouldn't last long, because the market, if it's really interested in something, it should scoop up the discount as fast as possible. And so reframing this, I think, is going to take some time, right? It's going to take some turnover. Based on a good amount of polls that were put out, a lot of people missed out on the BTC move because everyone looks at Bitcoin and then goes, all right, I have to get the next best iteration of that. I have to get leverage exposure through altcoins. So that implies there can be a lot of hidden leverage in the market, not in BTC, but in alts. And based on a lot of polls, it's like very few people who participated in polls that I saw over the last week took profit. Like, there is still a significant amount of unrealized profit in the market. And without a catalyst ahead, and maybe just the slow upward drift that we can expect over time, over the next couple months, you're going to see people get bored. You're going to see people take profit just out of boredom and sort of, hey, I'm going to sit on the sidelines and wait for the next best setup. So that's something that's, you can't overlook that. So I think over the next, absent some kind of catalyst, and a catalyst can be Trump literally right after inauguration, just pounding the pavement with regard to crypto, right? Getting on the loudspeaker with regard to crypto. That's a better way to put it. I think the market's really going to be looking toward what he has to say about crypto and what he does immediately, right? This is his second term. He can act right away. He's familiar with being president. He doesn't have to like feel his way around in the beginning like a first term president does. People are going to be looking for that Ross pardon right away and looking at that as sort of proxy for what everything else he said, and holding him to his word. So I don't see like why the market would rip up in the near future. But I also, I'm not saying that. I also don't see why the market should fall off a cliff in the near future unless we start really probing below, 90K aggressively. It's never good to trade back within a gap and then high time frame chart doesn't look good. And then suddenly it looks even worse. And you get sort of those flashbacks of the past and what's happened before. And then the top conversation gets a little louder and people don't realize like no one agrees about the top at the top, but in prior tops, like there was the same conversation. People say, oh, at prior tops, they didn't talk about the top. Yeah, it was split. Like there's always half the people saying the trend is over and the other half saying that it's got more to go. The market moves because there's disagreement, right? The only time when people really agree that the top is in is actually when it's like 30 to 50% off the top. And by then you're fucked if you didn't take any profit, right? So I think the future is path determined, right? You can say in this market because price is the fundamentals are price, right? Price is fundamentals. It is a really reflexive market. You can say that, hey, if we break lower, then it could be over. Well, yeah, that makes more sense, right? Obviously. But I'm not right now. I think the trade was being bearish right around, like I said, going into FOMC, I said a couple things about not wanting to push it, de-risking some of my positioning. I think I'm open to both sides now, but there doesn't seem to be a strong reason to think that this thing is going to completely fall back on itself. I think we have some time to probably, I would say, chop down rather than drift up. So mid 80s, and then we'll see, how constructive things are if we get there. It could have been worse. Like there's not a whole lot of threat below there is, right? So there's stops below, right, that we have not tagged yet. So we could get one of those long liquidation moves that, is very brief. But today there's an options expiry that I think would have been a little bit more significant if we broke it. It seemed like there was a lot of aggressive put buying at the 90K strike, a decent amount of open interest there. Market makers essentially short that and would need to have covered by buying back or selling into that. And then you have that through the 90K level with a bunch of stops. So that could have been ugly, but we didn't get that. So yeah, I mean, as long as we're holding 90K, I think from a contextual risk reward standpoint, you look for some kind of mean reversion back up, maybe tag around that 50, that high volume node. There's a nice amount of confluence there, maybe to upper 90s again. And then you just stay open to both sides of the trade here. I sold some put spreads earlier in the week. Those turned out well. That was a shorter term put spread. So I think that was, I think I bought 86s, sold 90s, 91s. As long as 90K holds, I mean, it doesn't make sense to really think that this thing's going to fall off a cliff until it starts inching towards it a little bit more. There's a couple other things that I wanted to talk about. Let's see. I have a few bullet points. All right. So the short term, there's a couple things that could affect the market that are, I think, more lower time frame related. Again, a lot of these things are not going to affect the bigger picture, but I think most of the things I tweet and talk about are probably not relevant to like 90% of people, because most people want to just buy and hold. They're not trading intraday. Mind you, this is how most trading takes place in trading industry, right? Trading intraday, trading lower time frames, trading intra-week. This is trading. Like the idea of just like, hey, we're just like always looking for the best. multi-month swing trade, I mean, that is the most difficult field to play in. So the idea that CT hasn't mastered is, it's a bit confusing. In the short term, there are a couple things we have to think about. The DOJ is one of them. So I think they have like $6 billion worth of BTC left. They're cleared to sell that. I mean, are they going to get that off in the next, I guess, week or so before the inauguration? Do they want to do that? Are they trying to put that on Trump's plate or throw that at the market before the switch? I mean, I want to say no, right? I'm of the camp that I don't think it's sold yet, so I should say that. So, there's a conversation around whether or not, because now it's known that it's priced in. It's not priced in. It's rarely ever priced in, right? $6 billion worth of BTC. To put in perspective, like up here, the market is decently exhausted, right? And Saylor has been buying yards of Bitcoin. So for anyone who's not familiar, yard is a billion. Saylor has been buying yards of Bitcoin, and the market has not been able to move higher. And on low time frames, you can see the market is more sensitive to the downside. So the market definitely hasn't priced in that size. And I think that, my belief is that it's not sold yet, and that when it's apparent that it is being sold, right, one building on the other, right? My first belief is that it's not sold, and if we start to see aggressive selling and that we, see that wallet goes down, and it's sent to Coinbase, whatever, then it will be exacerbated and we'll get even more reflexive moves to the downside. So this could be the thing that takes us below 90, takes us into the 80s. You want to see a response right out of the 80s very quickly, right? If you start accepting into the 80s, you're going to trade back into the 70s. It's just a matter of time. And accepting for me means, what you want to see off of something where the market gets spooked below 90 is that it's one of those big liquidation wicks. If you look at it, we still have a decent amount of OI built. So if we look at sort of the origin of this move, where's the open interest? Oh, I have the wrong. So there is we'll just go to this. So the origin of this move, let's aggregate open interest. Make sure that this is this is global. So global levels up still. So there's still a decent amount of positioning up. That's excluding, I should say, that's excluding alt. This is alts open interest, right? And then this is aggregate open interest for BTC, but this is not coins. So this is a little bit misleading because as price rises, obviously that value is going to go up. But you could see that from this move, I mean, we'll just do a quick eyeball test. 32% higher, and open interest is slightly higher than that. So it's at par with this move, but again, there's positioning that's gotten involved up here that if we start trading back in this gap and start trading back sort of towards, a break-even level, you could see a pretty nasty spill into the 70s from that. So you want to see a very quick response in the 80s. Anytime you trade back into a gap, right? Anytime you have an area of the market that's kind of one time framed up, hasn't had any kind of value built, if you trade back into that level and you don't see an immediate response out of it, so an immediate snap, right? Liquidation run, stop run, and then an immediate snap back up, it's just more than likely you're going to start to build value within that structure. So then you get something that ping pongs between like the 90s and the upper 70s. And God forbid we started trading back in this range, it would be a completely different conversation. But hopefully you've taken a good amount of profits where if that happens, you could look at it and be like, damn, aren't markets a motherfucker, rather than saying, motherfucker, I didn't take any profits. But either way, if that's not sold, then I think that is trouble, right? Because we haven't really seen we have the aggressive buying that we have has not been able to take us higher. Sailors buying has not been able to take us higher. First week of January, where you get a bunch of redeployment, a bunch of fresh capital added. It's not necessarily been the case. Stocks have been having trouble though, so there's that. If it's not sold, or I should say if it is sold, so if we get wind, right, not saying it can't not be. If it's the case that it was already sold, the market's going to squeeze really hard. Because that is something that most people lean on, the idea that this could be like the German government selling, where people were saying, "Oh, that's priced in," and then we moved down. I forgot how far we moved down when that was, but we moved down a lot. I think it was like 70 to 50? I don't remember. Don't quote me. I just remember that being something that was a barrage of flow. It was relentless, and you couldn't find a buyer to do anything at that point. So in the case that it's already sold, market's going to squeeze much higher. And honestly, if we're holding 90 from a risk to reward standpoint, this is a great level to define some kind of shorter term bullish bias, right? If the assumption is, all right, so yeah, my belief is we're not going to make a new all-time high anytime soon and trend, right? So it doesn't mean I don't think that something like this can happen where we squeeze up and then get some kind of more fuckery within here. But if the assumption is that we're still going to trade around and have this kind of high vol first quarter at least, then it's obviously better to be a buyer down here than a seller. All right, so this is a good level from a contextual risk reward standpoint. So there's that. That's also like, I think you want to see that because this is starting to get really ugly and there's just a lot of eyes on it, and there are people that are starting to panic a little bit, I think you want to see that prior monthly lows hold. So again, 90K, 90K, this is 90,500. That's the level to see some kind of trap either put through. So you force people into the market there, break down sellers, run long stops, and then trade back above. But if you're trading back under that, I mean, there's a lot of space below. So we have the inauguration coming up. So again, I said Trump needs to act fast. He needs to prove to this market that everything he said is he stands by. I mean, Trump's not really. I don't think he really truly cares about crypto that much, right? I think he's loyal though to the people that put him in office, the people that were by his side. But at the end of the day, like, the guy is more interested in golfing than anything else, like, for being honest. I do believe he's, he loves the United States of America. He believes in it. But I don't really think he cares too much about crypto as much as he maybe cares about Bitcoin, honestly, or the stock market. But we'll see. Again, a lot of this is contingent on how TradFi trades moving forward, right? So if we continue to price in no cuts, or if the market really comes around to the idea that the cutting cycle is over this year, I mean, listen, if we have that, if we have a dollar that continues to push up, if rates continue to push up, I mean, there's a lot further that the S&P can go down. And I kind of think that this is more likely that, we'll chop around with BTC for who knows how long. No new all-time highs and trending market up, but then we actually, I think we will get eventually a pretty sharp move down. So I should say, what this means or where this level is. I think we will get a move into the 80s, to be honest. I'm talking about right now where we sit. Like, it doesn't make sense to think too far in advance. Again, it's not like you're not shorting a breakdown right here because we haven't broken the 90 level. So to talk about shorting and selling right now, if you're talking about spot and de-risking because you don't want to be in it if we go down to 80, that makes sense. But I kind of see, based on the way that rates are moving and the dollar's moving, and there's something to be said, I think, now for the wildfires causing inflation to go up as well. They're being inflationary. Prayers to anyone who was affected in California. But these aren't even like wildfires anymore, right? They're literally like fires in neighborhoods. Not funny. But I do think that, I think we look at a market in the summer that has been broken down, and then Trump, I don't know, puts someone else in instead of Powell. I don't know, can he get rid of Powell? I don't know. But someone who's really dovish, and then it's like markets rip up on that, and then who knows where that ends. We have not seen the extent of the AI bubble. I think AI is where you want to. I think AI is where you want to focus in crypto. A lot of the AI sector is dog shit right now. There's a lot of garbage, but I think it's where you have to focus, right? I think you have to focus on the AI sector. You have to have the AI watch list on, because that is I think the most compelling narrative. I think there's the most substance there because it tracks along what's taking place outside of crypto with AI. I think that we haven't even seen everything yet. Obviously, we've seen nothing yet compared to what's going to come over the next couple of years, absent some kind of major catastrophe, right? That resets us. And I think crypto is going to really track that well. Meme coins, I don't think, are going to continue to hold much value. And it's because when there is actual substance to bid on, or something that seems like substance, I think things like that are stickier in people's pockets. And what I mean by that is that people can hold on to something when they tell themselves a little bit more of a story other than this is a meme and, screw the man, screw VCs. That is kind of a movement, but I don't think that across the board sectors can work on that. Certain assets can on their own, but people at the end of the day, they want to believe they're investing in something that's tangible, that's real, that's going to be here and lasting. And capital in this market is too used to things being bullshit, right? So when we've gone through this period where memes have been the best thing to be in, and finally we're getting to some kind of substance and utility, that is just, I would not want to miss out on that and not keep that, complete focus on that. So I don't really have anything specific to say about where and what that means. I was in a couple trades. I shared my entry and exit in PAL. Ava's done really well. But this stuff is just high beta BTC right now. I mean, Tau looked great, and then Tau looked like shit. And you can see there's not a lot of belief in the people that are buying these things. Like, they move very quickly to the upside, but they don't hold. They don't have a bid when when shit hits the fan. There's no there's no fundamental buyer that steps in for these. It's just, hey, price is going up, let's join in. Hey, price is going down, like, I'm out. Another thing that I think, again, I've mentioned this numerous times, and I want to buy a little bit here and there at these prices, is hype. And it is because it's something for the first time that's tangible, right? Hype is a great exchange. Hyperliquid's a great exchange. It's got a ton of mind share. The problem with Hyperliquid is that, and this might piss off some people, is that it's absolutely going to be KYC'd at some point. Like, there's no question that it's not going to be KYC'd. No question. So I mean, you have to understand there's still, so Biden on his way out is going after, you have Biden going after crypto wallet makers. You have them going after Coinbase the last 48 hours to go after Polymarket. This is all around United States citizens trading on these exchanges. And it's not that the trouble doesn't fall on, like, if you're trading on the exchange, and I'm not a lawyer, but from what I've gathered from people that are, it's not you. It has nothing to do with you. You're not, if you're trading on Polymarket, you're not in trouble. It's Polymarket, right? Same thing will happen that's why all these exchanges have KYC'd. And it's just a matter of time, right? And exchanges are trying to push a lot of exchanges, if they're new, they can afford to get away with it for a while. But exchanges don't want a KYC because they don't want to cut off a significant portion of their customer base. But I think Hyperliquid will absolutely have to KYC at some point. So, will that affect any positioning that you gather now? And no, maybe not. Maybe that happens in 2026 and Hyperliquid's already $100 by then. Who knows? But I do think it's a compelling asset to own because, again, it's got a ton of mind share. It's a great product too. And there's not many times when we have opportunities in this market to actually see something that's tangible, tradable, and does have a lot of promise, and you're seeing that it's adopted. There's a lot of in crypto, there's a lot of solutions for problems that do not yet exist, right? Which is it's an easy market. It's an easy market to come to market into, so that makes sense, right? There's no friction to list something. You just need an idea and a friend at the exchange in many cases, and that's it. Um, so, yeah, I mean, I don't like from there was a ton of conversation over like the last week, and I was one of the people mocking it about it there being an alt season coming up, right? We're going into alt season. Um, and a lot of them, I think it was like purely from a calendar standpoint. It was like, oh, we did this time once in the past. I have a lot of thoughts on alt season. Strong alt seasons were, so one, like, what has the trend been with this market? It's been the market has been, there's been a lot of dispersion, right? So what that means is like asset selection is really important. It's not like there's this rising tide taking everything up. You have to be a picker. One of the reasons that that's the case is because there's too many assets now. There's so much dilution. So there's just not enough money to go around to keep all these things bid. And there's a ton of things, like 150 with valuations over $1 billion, I think, maybe 130. And they're not even real companies yet. Like there's so many things that do not deserve those valuations. And a lot of people look at that and they go, look, all of these are billion. They all could be 20 billion at peak mania. Like, buy now. And it's like, no, dipshit. Like, the market is smarter now. And the people that are getting involved through ETFs and through TradFi are way smarter. They look at this like, when people say things like that, people from TradFi look at crypto Twitter like crypto Twitter is retarded. And apologies for the choice of words, but that's just the truth. And honestly, with ETFs, like, there's a ton of liquidity fragmented away from the market because a lot of what's driven this market has been BTC. Not a lot of people have been in BTC from this market. Most of the capital driving this market is not from this market, and it's fragmented away, right? It can't just go into altcoins. Altcoin dynamics and market dynamics when there was only alts and BTC pairs, much different. And then it changed when there's more stable coins and then all stable coins. And it's different now. And now that liquidity is fragmented away. And honestly, we're not even at a place yet where, like, we don't have that bid yet to even protect BTC forever. Like the passive bid that everyone talks about, that, you know, I talk about often. You want that passive bid to come through the ETFs, that comes through stocks as well. But it's very unlikely that, so what's going to happen is BlackRock, and this is one of my predictions for this year, is there's going to be more structured products. There's going to be more ETFs with bundles. They're going to continue to drive down Bitcoin's vol, right? To bring down volatility, to bring down realized vol. And when it's halved and it's kind of boring, then boomers will be willing to get involved. And then you'll see that sort of passive bid over time where it's like they're not even paying attention to what's getting put in their portfolio, but they don't want any part of something that is moving up, you know, double-digit % the way that, you know, crypto can move. But either way, alt season, like I don't see where it comes from right now. I don't see, like, people are talking, they have this like romantic idea of the past continuing perfectly into the future. It just hasn't been that way at all. Like, there's not enough money for that to happen. So what it means is, like, there is definitely enough money to go into assets and pump the shit out of them, but at the detriment of other assets. So you can have two people in this market, and one of them has a completely idea of where we are in the market. You could have one person that, like, this market is ripping, it's amazing, you know, alt season, and then another person in the wrong assets, and they're thinking it's a bear market already because, you know, they're in things that have completely retraced, that just don't have, there's no real capital behind them, and there's no more interest in them, right? So I think dispersion will continue. So the idea of alt season just means it's just like these rotations that are happening, and they'll get more concentrated, but a rising tide just isn't happening. Like, this, it's just not happening. There's too much garbage, and there's not enough money to go around to lift it. And for the first time in a cycle, there's a ton of money that moved the market that's not even in the market, right? So I think, honestly, Bitcoin dominance can continue to go up. And I think things against BTC continue to go down. Solana does not look, you know, Solana above this high, different story, right? Whether you're looking at it on, so Solana above 210, different story than Solana now completely retracing. Like I was never, every spaces I've been on the last couple weeks with, we do sync what spaces with Maine, and I kept saying like my target is like, if we're going to continue to move up, like at most it's maybe 300 to 400. Like I'm not looking at Solana $1,000 target. I don't see why. From a market cap standpoint, it's already made new all-time highs. This to me does not look like it's ready to continue to rip. And there's potentially more supply coming into the market that has yet to be worked out. So I'd rather have that in the rear view than anything. Structures like this, to be honest. So not a TA trader, and that always confuses people because they see me pull up a chart when I'm doing something like this or to share an idea. Things like this. So everyone's looking at something like this. More often than not, like the best setups don't occur with a breakout and a retest like this in continuation. It's often the case that when you have like a market that is funneling, that the move down, fake out to the downside, and then the ripper is likely to lead to continuation. So this to me reminds me of like a reversal pattern, because you brought more of the market up into this. You've made the market a little bit more top heavy, and then you're starting to trade back into prior positioning, right? And again, there's, we're well into this. There's a lot of unrealized profits still on the table, and there's not a whole lot of urgency to get into anything aggressively, right? I don't know who the marginal buyer is at this point across the market in the near future. I mean, if you look at like BTC on its own, again, above 90K, managed to hold that level. Perps trading at a discount to spot. We've wiped a good amount of open interest a handful of times, but it just seems like the market is a little exhausted. And in this case, I think exhaustion usually leads to moves further down until we could find more, we could find a level that buyers are more excited about. Sue, there's a lot of conversation around Sue. I don't know anything about tech in this space. So that's, I can't say anything about it here. There's a lot of people that are under the impression that Sue is like the next Solana. I don't know if I'm able to talk about that at all either. There is always that tendency because of cycle thinking to think about, hey, what's the next, version of this cycle's darling next cycle? You have to just consider valuation for Sue is already tremendously high, right? And there's like no activity on this from what I understand. Whereas there is activity, there's a ton of activity on Solana, right? Solana has been the darling, and it's for good reason. It's been favored above all. So, I don't know about Sue. Whiff is embarrassing. Meme coins are completely Christmas treed. Popcat. Goat. Bonk's looking really ugly again. I mean, Bonk is probably getting closer to a better place to buy again, but there's only so many times that you can do this to your holder base, right? There's only so many times you could completely wipe people. Pepe is the one meme coin that I think it has true staying power. Like if I was going to bet it, if I had to bet it all on the meme coin outside of Doge, it would be Pepe. DeFi. I think DeFi and anything with substance like AI, like I said, is just, I think it's the area where you would want to be a little bit more focused. Fartcoin, again, it's a meme coin. It was an attention grabber because, they were talking about Fartcoin on CNBC, I think. What are the lows? Okay, so it's a bit of a different story if you look on MEX and you look on Binance. I don't know. I mean, with this, could we bottom somewhere around here? It's below $1, right? I think, that psychological level. You had a couple bounces around there. I mean, if Bitcoin mean reverts higher, Farcoin probably follows, right? But I think this is something that eventually comes back all the way down 80% off the all-time high. And I would, you know, expect the next real opportunity for this to be somewhere around here, right? Somewhere around that 50-cent mark, between 50 and 60. Trade back below those lows. I mean, there's definitely different price history if you're looking at this on, you know, on Dex Screener. But yeah. So really quickly, and then I'll probably wrap this up. I've been meaning to get on here though, and I haven't been in the Telegram. So I shared one trade this morning, and it was this setup right here, and this was driven off of NFP, so non-farm payroll. This is on my Twitter for anyone who wants to look at the entry and my sort of exit criteria, or the entry criteria is, it's kind of implicit, and I shared the exit as well, so I ended up bailing out of this after it hit target. But this is the NFP move, right? So non-farm payrolls came in very high. So this is a catalyst-driven move. S&P as well, right? Was like water falling at this point. And if you look at the open interest wipe, one sec. Let's get this so it's scaled. Oh, let me close that. That'll help actually. So here is non-farm payroll. So 8:30 a.m. So you have a big wipe, a bunch of liquidations. Market looks like it's going to scream lower. Get a little bit of a pause. I didn't take the long side of this. It wasn't like there was like a massive liquidation run that was, a mega pro below some kind of really significant swing point. Like if we get a mega liquidation run below 90K, it's a different story. But with this, because we're still sitting above that level, my assumption was we could definitely just continue lower very quickly. But instead, what we did was we ended up filling out that gap. So as soon as the market starts to trade back above into the structure, right, and you have, again, right here, it's a lot more obvious that it's going to happen. So you have a series of higher lows built, markets building a lot of volume, and then you poke back into that gap. And the gap is just this structure right here where there was really nothing that took place there. It was just a very one-sided move. Again, mostly an algo-driven move. But a lot of times, once you start doing that, you just trade back down to the breakdown point. So a lot of times what this means is you trade back down to the lows that broke through, the local lows that broke through, right? So realistically, someone might draw this one, this one, this one. You're looking at the trade back to the underside of the structure, all right? Sometimes you get a complete overthrow and you take those stops, and then you'll chop a little bit higher. But more often than not, if you get this kind of throwback that starts failing right at the underside of the level, it's a great short opportunity, because all the market did was it closed out an inefficiency, right? This is a very high volume move, and the move that recovers that is doesn't really take much volume at all, because there's not any, the book really hasn't replenished. There's not a whole lot of pressure. You've taken out a lot of pressure because you've flushed out a lot of longs. So you've taken out selling pressure. But then you end up getting back to a level where people are positioned in advance, right? So people are building position prior to this, right? Longs are building. And then you get back to that level. And for anyone that just got caught off sides on that move, there's a good chance that you see supply pick up around that level because people are looking to get out around break even. And then on top of that, you have the people that are looking for this trade to take place, right? Cover the gap, and then you'll just trade back down to the low to retest the low. So the trade setup was fairly simple, right? It was looking for that weakness up here or in this region, sort of closing your eyes and selling this. I think I sold 94.5s. And then all you're doing is, or all I was doing, I should say, was targeting the low for a revisit. It's very rare that unless you have a continued barrage of catalysts that you get just a continued sharp move lower, right? So if you have something that's a big gap down and then you recover it, if you recover it completely, it shows you there's a decent amount of buying, right? There's a decent amount of presence, and it's not continuously slippery. So it's rare that you'll see this, and then this will just continue to march, thousands of points lower. Instead, you usually just retake another low, force breakdown sellers into the market, stop out these longs, and then you chop around. And if you look at this structure, what you end up doing is you fill that out, right? So it's kind of like any other gap. If you accept in the gap, it's kind of like the idea of me talking about trading under 90, right? And filling out between 80s and 70s. People will continuously sell the lows, people will continuously buy the highs, and you'll get some kind of value filled within the structure. I don't have any other trade setups right now, to be honest. If we look at this on like the daily, again, from a contextual risk reward standpoint, it favors, I guess, a long bias. Not I guess. I mean, it favors some kind of neutrality, right? I don't think you should be continuously bearish in the short term. But if that 90K level goes, then I think there's trouble. I would look for some kind of continued selling and absorption at this level over the weekend. Again, for possibly a move that continues higher, and not like, not talking much higher. But if we continue to chop around here, then something that trades back into the upper 90s makes sense. It's kind of like we filled out one gap right here, but we still have a pocket up here that I could see us revisiting before maybe even chopping further sideways, or end up moving into the 80s, which I do think is going to happen, right? But no strong views right now. I'll probably wrap it up. So VIX term structure up. I think I got everything I wanted to touch on. This is a good catch up. So anyway, thanks for tuning in, guys. I'll go back to being really active again in the Telegram now that potty training week is over. And hopefully that was clear and concise. Give you my thoughts. Is the cycle over? Yeah, I think that easy mode is over, right? Easy mode is the mode that people think of when they think you just buy, shit post on Twitter, like I said, check your portfolio once in a while. I think that we're going to be in this under 110 for quite a bit. I'm not writing off much lower. I'm just not immediately thinking of it right now. The same way I'm not thinking about, opening the door on the other side of my house before I open the door of my office. Right. But yeah, thanks for tuning in, guys.